What's up traders, welcome back. In this video we're going to go through the approach that you can use to trade during the December month. You guys know that most of the mentors recommend that you do not trade during the festive season, but you know that we are addicted to pips. So let's get into the video. So you guys know that the market can be weird during the festive season, but obviously the setups will always be there. So my recommendation is to trade from liquidity to liquidity, because trying to hold trades will frustrate you because of the long consolidation in the weird market structure. So we know by now that the market moves from liquidity to liquidity or liquidity to imbalance. For those that watched the previous daily bias video, what's happening here is theoretically the second condition that we had for a bullish day. When we run a previous day's high or low and fail to close above it or below it, that structure on a lower time frame is a turtle soup setup, which is also known as a Persian revert. That's basically running a pool of liquidity, in this case sell side, and going for the opposite liquidity, which is buy side. And that's how I took my current trade on Euro USD. So you're on the daily time frame on Euro USD. Someone said I should show how I would use this to find trades. So on this time frame, you can see that we had a run on the previous day's high and failed to close above it. So that's a turtle soup on a lower time frame, which is also known as the Persian revert setup. So when this happened, we anticipate the opposing liquidity to be ran. We did and failed to close below the previous day's candle again. So we expect the same thing to happen again. We target the opposing liquidity. So we are bullish on the next day. We had an inside bar, which I didn't trade. So the buy side liquidity is still open. So you can still be bullish or take a day off if you're confused. So this is what I did on the next day. I went into the day with a bullish bias. So let's see what I was looking at on the lower time frame. So on the 5-minute time frame on Euro USD, we had a high impact news on that candle with a huge spike, which took buy side liquidity. We had a market structure shift, which created relative equal lows, and we attacked sell side liquidity. Now this candle represents the London close session, which is at 11 AM Eastern Time and 5 PM local time. This session is known for profit taking by institutions, which will cause retracements and reversals. So if you took trades before the session in any direction, when the session begins you must close your positions or take most of your positions off, because you might have a retracement or reversal. So since I'm bullish for the day and the market has taken sell side liquidity and we are inside of the London close session, it made sense to look for a reversal to target buy side liquidity. But remember, we have already taken buy side for the day. So now I'm still going to look for buy side liquidity, but inside of the range from today's high to today's low, which is internal range liquidity. So my low hanging fruit is this fair value gap. So I took a buy off of this order block, because this time frame became bullish once we closed above it. I'll share with you guys my order block rules as time goes on. I don't want to make this video long. So you can see me putting my stop loss closer to the low of that order block while the market is pushing down. It's like I was asking for it to be taken out. The reason why it's not too close is because I included the spread as well. Understood that if you trade below that candle, I was going to be bearish on this time frame. So we had a rejection and went straight to TP. So there you go. I hope that this was insightful. Please like and subscribe for more. I'll catch you guys in the next video. Until we meet again, that's what I'm.